Which is the best dividend stock to buy right now? Is it Raytheon Technologies stock, Caterpillar stock, or Coca-Cola stock? I'm going to answer that question in this video, looking at these three dividend stocks across four financial metrics, starting with dividend yield. So let's begin. So Raytheon in purple has a dividend yield of 2.21%, Caterpillar at 2.19%, and Coca-Cola with a dividend yield of 2.78%. The three dividend stocks have a very similar dividend yield with 50 or so basis points separating the top from the bottom dividend yield. So there isn't a significant difference to make a clear-cut decision just based on the dividend yield of which one is the best dividend stock to buy. Also, remember, when you're investing in dividend stocks, you get two sources of return. You get your dividend yield, but you also get a return from the stock. If the stock price increases, you get an additional return in addition to your dividend yield. But if the stock price decreases, that could eliminate completely the dividend yield and you could even lose money on the investment. So it's important to consider more than just the dividend yield when you're looking to invest in dividend stocks. For that reason, I'm going to look at revenue growth next. Looking at these three dividend stocks on revenue growth, Caterpillar has the highest annual revenue growth in its most recent year at 16.59%. Of course, Caterpillar benefiting from rising inflation, rising commodity prices, and a lot of fiscal stimulus that's creating a lot of construction spending, right? You had the infrastructure bill in the US and other places in the world also passing fiscal stimulus in response to the COVID-19 pandemic. Caterpillar is experiencing a growth in demand and also they increased prices on their products, so they're getting a 1-2 punch. Coca-Cola revenue grew 11.25% in its most recent year. Coca-Cola has a lot of market share, a lot higher market share in away from home channels like restaurants. And now that people are spending more time away from home, you're probably spending a lot more time away from home in 2023 than you did in 2021, right? And in 2020. So with that, Coca-Cola is benefiting because when you go to a restaurant, you probably buy one of Coke's beverages, and that's a big tailwind. And finally, Raytheon with revenue growth of 4.17%. Raytheon also benefiting from selling more of its products. It, of course, sells some of the military equipment that's going to support Ukraine to defend itself against the Russian invasion. And so that's providing a boost in sales. And then when the US needs to replenish their own inventories after sending some of their equipment, that's going to be a boost for Raytheon as well. So all three of these dividend stocks are likely to experience revenue growth in the near term. The next thing I wanted to compare these three dividend stocks on is their operating profit margin over the trailing 12 months. And looking at this metric over the last 10 years, you can see Coca-Cola is way ahead in this regard, a 27.8 operating profit margin in the most recent 12 months. But Caterpillar is doing a good job increasing its operating profit margin, rising to 14.86%. And then in last place, Raytheon with an operating profit margin of 8.6%, going in the wrong direction longer term if you look at the chart. The final thing I wanted to compare these three dividend stocks on is their valuation, the price of the stock. And the way I judge the price of the stock is not on the price per share, but on the price to earnings or the price to free cash flow. So I want to judge the price per thing I'm getting in return, right? Just looking at the price isn't enough. We have to look at the price compared to what we're getting. And so I chose to use the price to earnings forward 1 year. So this incorporates the prospects for each of these three dividend stocks over the next year. According to this, Coca-Cola is the most expensive at a forward PE of 22.77. Raytheon is middling at 17.33, and the cheapest of the bunch is Caterpillar at a forward PE of 12.74. So to answer the question, which one of these three dividend stocks I think is the best one to buy right now, I would say is Caterpillar. Caterpillar is my favorite dividend stock out of these three to buy right now. All right, so that's all I've got for this video. I hope you enjoyed it, and I hope I will see you again soon for another one of my videos. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.